Welcome to Connect, the podcast for California MBA featuring one-on-one interviews with the movers and shakers in the mortgage industry. My name is Paul Gigliotti, CEO of the California MBA, and I'm so thrilled that you could join us. Before we jump into today's guest, which we're going to learn a lot about in a few moments, I'd like to thank our 2026 President's Council sponsors, AmeriHome, Consolidated Analytics, CMG Financial, Guild Mortgage, Rocket Mortgage, Wiener, Brodsky, Kinder, and Western Alliance Bank. These companies provide such a huge, tremendous level of financial support for our association, and we are so appreciative of their continued efforts and partnership. Now let's jump in. Welcome back to the podcast. Today, I'm joined by Vik Kasparin of Rams Mortgage Capital, a leader in mortgage asset training, valuation, and advisory services that plays a central role in how mortgage portfolios are priced, marketed, and sold across the industry. It's towards the tail end of the loan life cycle, but it is a very important step in the process. Rams isn't traditional originator or servicer. Instead, it sits on a critical junction between lenders, investors, and institutional buyers, helping financial institutions optimize value, manage risk, and find the right homes for whole loan assets in its constantly shifting marketplace. With billions in loan activity and deep proprietary understanding of pricing, flow, and investor appetite, Vik brings a very unique market perspective that bridges origination, capital markets, and mortgage strategy. Vik, thank you so much for joining us and welcome.
Thank you, Paul, for having me. I appreciate the opportunity.
Absolutely. So we've got a lot to talk about, and I absolutely hope, I know I'm going to learn a lot myself from this conversation. So let's dive in. The first question I'd like to start with is Rams Mortgage Capital isn't a typical mortgage lender, right? That's what I said in my opening. You focus on the secondary marketplace, whole loan trading, valuation, and advisory service. Can you give us a description as to what RAM does for a high level description and how you help lenders and investors find value in today's mortgage assets environment?
Absolutely. So thanks for pointing that out. Yeah, we do not originate mortgage loans. To your point, we basically become relevant, well, during the loan pipeline cycle, after the loan closes, and then at varying settlements when there are transactions. So in the pipeline cycle, we will help banks, mortgage companies, holders of whole loans and mortgage servicing rights by doing valuations of those loan assets.
Okay.
When those institutions, if and when they want to sell those loans, we also market and help them, bringing buyers and those sellers together to help them facilitate a transaction.
Okay. So does Rams jump in as they see lenders pipeline so would a lender bring in Rams capital kind of towards the end of the loan life cycle or just as like a file, let's say, is clear to close, as the lender is deciding what to do with this asset? Is that kind of where you come in the loan life cycle?
So we don't typically trade loans that are agency kind of vanilla 30-year fixed. We focus more on specialized assets. So
Okay.
non-agency, jumbo, maybe an agency loan that where if you have a portfolio of agency loans that are non-owner or second homes, there might be an opportunity there to arbitrage the loan level pricing adjustments that Fannie Mae or Freddie Mac imposes. So those are the types of agency loans we trade. So typically, we're not trying to compete with AmeriHome or Penny Mac or any of those aggregate or Fannie Mae for that matter. We are more akin to helping folks with their jumbo paper, non-QM paper, second liens, bridge loans, and that sort of thing. So kind of on the outside
Yeah.
fringe of loan product.
All right, so you've been busy. You've been really busy then because
Very
the markets
busy.
have changed so much, right?
They
Like
have.
they're all pointing to the exact products that you're speaking of. So let's jump in and talk about the mortgage market shift. It's shifted significantly over the past couple of years. Not only fluctuation with rates, supply and demand imbalance, but the behavior and appetite for loans. We've seen a huge increase in rise in the non-QM marketplace. Obviously, jumbo, especially here in California. Um, how do which plays a role in what trends you're seeing in mortgage asset demand, pricing, and liquidity? How should lenders think about this? What would you say to lenders that are listening as this market shift is continuing, and maybe give us some insight as to is it going to continue the way it is?
Yeah, I mean, you've hit on a lot of major themes. Rates have moved down. Buyer appetite has been tremendous. We could probably spend a lot of time unpacking each one of those. But I think what's really interesting and important is that there has been this supply-demand imbalance. With the rates from 2021, um, you know, being so low and a lot of that, we kind of made a lot of loans that we took from future years. So now production has really obviously it's come off, from that low rate environment, but the appetite for loan assets has actually grown. We've seen insurance companies, and you've probably heard this, that, the insurance companies and asset funds are out there trying to acquire loan assets. And that has been a meaningful demand increase to the market here, and that's driven the yields on a lot of these non-agency loan assets down. So if you think about, in traditional terms, you had agency loans and then maybe jumbo loans and then non-QM, there could be 150 basis points of yield spread there. But right now it's really tight. So you have
Yeah.
agency loans, jumbo right on top of agency, and non-QM pretty much at the same yield as a jumbo loan. So there's just so much demand that it's really pushed those yields down.
Yeah, what an interesting time. I think we're going to have to set up another a time to chat because I'm sure there's just so much we could go into and dive into about how the market conditions, have changed appetite and what that looks like in the future. Um, but I digress. Let's talk about risk valuation and whole loan trading, if you wouldn't mind. So, accurate valuation and pricing is core to how Rams operates. That's what I found in my research. With so many different loan types as you were talking about, and maybe the risk portfolio and investor appetites, and what Rams does or types of loans that they support. How do you approach valuation? And on top of that, maybe you could share with us what's one misconception lenders often have about selling or trading loan assets. I think that would be something very interesting for our learners to hear. Or
Okay. So, yeah, valuation has been a growing area for us in the sense that, you know, 2 years ago or 3 years ago with non-QM production and jumbo production fairly low as compared to where they are today, it was not as big of a concern. Today, non-QM production has grown tremendously, and the future looks like it's going to continue to grow. And so those assets are a little bit different, right? So there's pricing is not published on the websites like they are for agency loans with TBAs. There's a lot of nuances with the products. There's prepayment penalties. So we approach the valuation of those assets holistically. And we have a model that we use. We also, survey the market. We're an active trading desk, so we see how these assets trade, in comparison to the treasuries, and so we monitor this very carefully, and we are able to very accurately kind of price these assets before they're closed. It's been a valuable tool to warehouse banks who are lending on non-QM, and some warehouse banks are, that's a pretty substantial part of their product mix.
Yeah.
So for them to have a good understanding on the exposure that they have has been really valuable. So
Yeah.
we've seen a lot of traction with that. Um, as far as the misconception about trading whole loans, it's kind of interesting you bring that up because it's kind of a running joke here on the trading desk that, when a bank originates a loan, they think that they're going to earn par for it. You know, and so they're, often surprised to learn that a lower coupon loan asset or portfolio of loan assets will trade down in the 90s, or, depending on how low those coupons are, could trade down into the 80s, right? So not everything, not everything is trading at par, even though you may have had some margin built into it at the time. There is that yield trade-off on price.
Yeah, it's fascinating. I picked up on one thing in particular you talked about with warehouse lines and utilizing your valuation support. Um, I would assume if warehouse facility organizations are not in the business of funding or lending on non-QM, they're moving in that direction really quickly. So I would assume that, for Rams Capital, this is an ideal time for you to, broadcast that you have this ability to support valuation, to make those warehouse lending organizations feel a little bit more comfortable about the asset they're lending on. Is that correct?
That's absolutely correct. You kind of nailed the progression that maybe non-QM was 5% of their book
Hmm.
3, 4 years ago, but today is 15%.
Yeah.
And some are doing 50%, right?
Yeah.
And a lot of these warehouse banks are, they're kind of business units within a larger, maybe more conservative bank. And so the risk controls and risk governance and regulatory agencies are all very much interested in how are you measuring risk,
Yeah.
and your risk exposure. Yeah, to your point, we've seen a big pickup in the interest in our mark-to-market valuations for warehouse banks.
Yeah.
We're able to do a mark-to-market for however large a warehouse bank, as frequently as daily. So
Yeah.
we will provide a daily mark-to-market on their whole book to give them a sense of exposure that they have to the overall bank. And there are many warehouse banks doing it daily. So
Yeah.
it's kind
That
of
that's
interesting.
impressive. That's
Yeah.
impressive. So as we're talking about the solution that Rams Capital brings and marketplace, let's talk to some of those lenders who maybe aren't directly involved in asset trading because they hear about it from their peers, right? So if you're a smaller IMB, maybe you're really just on a delegated platform and you sell that loan to the investor immediately. Maybe they're looking to bring in additional lines of revenue. So
Yeah, that's a great point. And so, there are lots of buyers for loan assets. And without having that delegated investor or that investor on your bench, there are alternative buyers out there. In particular, as we come into this non-agency kind of area, there are a lot of investors out there that want to buy up this paper, and you don't need to have that agreement as a correspondent seller.
yeah.
We are probably the largest trader of whole loan assets in the country.
Wow.
We trade a lot of scratch and dents in addition to. So we end up seeing a lot of a lot of that paper as well. And we have, a pretty deep, bench of investor buyers that specialize in those sorts of assets.
Yeah. Well, what a huge solution you bring to the marketplace. I hope that our listeners get to hear more and more about what Rams provides. And you're such a wealth of knowledge. I mean, I'm sitting back listening to this saying, gosh, when I was running, my IMB or at Pinnacle Home Loans, I wish I knew you were around, right? Because those were back in the days, 10 years ago where you didn't know what to do with your assets, whether you should keep them, whether you should not keep them, sell them off, scratch and dent during all those market changes, especially right now. So I'm thrilled. One, not only that you're a member, apologies, but that we had an opportunity to kind of dive into what Rams Capital has to offer.
Well, I'm thrilled that we had the opportunity to meet and talk today, and I look forward to future engagement with you and the CMBA. Excited about your new tenure there. Congratulations
I
on
appreciate
your
that.
new role. We're all excited to see all the good things you're going to do,
I
and
appreciate it.
yeah, look forward to working together with you in the future.
Yeah, and again, Vic, thanks for breaking down and sharing both your perspective, advice, as a professional, and then for what Rams Capital provides. To our listeners, thank you for tuning in to another episode of Connect, the California MBA podcast. Be sure to subscribe, share, and stay connected as we continue exploring the people and ideas driving our industry forward. Until next time, stay inspired, stay grateful, and keep building with purpose.